Hello everyone and welcome to my morning report analysis videos on Tuesday the 2nd of April with me, Richard Perry, market analyst at Hantec Markets. We have a fairly neutral look to markets today. A little bit of dollar strength that has continued, but if you look at the outlook on equities, for example, it's fairly flat, nothing really doing. Now the big news overnight was that Brexit continues to remain in a very uncertain in terms of the direction of where it's moving. So subsequently, all the indicative votes that were held in Parliament yesterday got voted down, and sterling fell on the uncertainty. Not a huge amount, but has fallen around about 50 or so pips today. Nothing too significant. But it has had an impact on FTSE 100, which is outperforming because that negative correlation between FTSE and sterling seems to continue. So subsequently, FTSE is up and doing fairly well. The other markets are basically flat. You saw a really strong move, I showed it initially, on the S&P 500, breaking out again to multi-month highs. Interestingly, it's now at an old pivot line between 2863 2873. So that is around about where we see the S&P 500 sitting, but futures today are a shade lower. So subsequently, we're seeing a little bit of caution coming through these European markets. The dollar strength that we saw yesterday on the back of the ISM data, that dollar initially looked as though it was starting to turn a little bit corrective, but that ISM data was very strong, better than expected, shows the US economy still performing well, and subsequently we saw the dollar gaining ground. We saw yields sharply higher yesterday, although again they've just slipped back a shade today, and nothing too significant in terms of the dollar. Well, the dollar has actually sort of held the gains actually with that move from the ISM yesterday. Sterling is underperforming. You've also got the Aussie and the Kiwi underperforming as well. That is on the back of the RBA, which had monetary policy decision today and held flat, stood pat and did nothing. Not really grooving too much in terms of direction either for future monetary moves, but yeah, we saw the Aussie and the Kiwi falling away on the back of that, and actually my chart today is the Kiwi, and I'll talk about that in a bit. But generally speaking, we're sort of fairly cautious. A little bit of dollar strength continues. Now we've got some data out this afternoon, the durable goods numbers, but initially we had the construction PMI for the UK 49.7. Basically around about where we were last month, so very slightly in contraction territory, as the construction industry, which is around about 7% or so of the UK economy, continues to sort of stagnate really. In terms of the durable goods orders this afternoon, ex-transport 0.2% positive for February is the expectation there, but it's a bit of a quiet day in terms of direct data, certainly the quiet day of this week for data. So my chart today is the Kiwi dollar. Now what we have seen, Kiwi dollar, look at this uptrend over the past 6 months, consistently hitting that uptrend and rallying back towards that resistance around 69.40. Subsequently we can see an ascending triangle formation. So is this now going to be an uptrend that holds, or is it going to be broken? Well, if you look at the momentum indicators, they are back to levels at which, certainly on the RSI, around that 40 mark, levels at which the market has found support and rallied each time. The MACD lines are back to neutral again. Stochastics are sort of starting to turn a bit of a corner, and interestingly back towards this key uptrend support. Now that higher reaction low at 67.43 I think is worth watching now. That needs to be watched, as what we have seen throughout January, February, March is that time and time again this 67.20 pivot line has held, and you've started to see some support coming back in. So this is a key moment, I think, for the Kiwi. Breaking below that 67, it's basically 67 figure level, which is an old breakout level. I think breaking under that would be a game changer, but at the moment we're holding the uptrend, and previously little corrections have been bought into. So this is a level at which the bulls are at a crossroads again. Can they hold on to this move? Now, you've got the hourly chart, which doesn't add a great deal. A little bit of a breakdown, very slight breakdown of the support from Friday last week. But generally speaking, we're fairly fairly sort of ranging really on this Kiwi dollar throughout 2019. Will this be another retreat that again gets bought into? It looks likely on the technicals that that is going to be the case, but obviously we need to be watching these support levels: 67.45, 67.20, which is that old long-term pivot line. So these are the levels we need to watch out for. So in terms of resistance, we've got today's high. So it shows better on the daily chart. Today's high, 68 figure area, 68.35. Yesterday's high. A couple of levels to look out for. But I wish you good luck in your trading today, and I'll speak to you later.